and that will be available from our website if you want to go ahead and take a look at that. Our previous sessions are out there already. If you missed an earlier one, you can certainly go ahead and take a look at that now. So if you're not familiar with who Business Ready Solutions are, I'll give you a quick overview. We operate for our clients as an extension of their finance and accounting team with our goal of allowing them to focus more on their core business. For services, we provide everything from accounting system selection and implementation, custom integrations and month-end close, account reconciliations, and even data entry. Again, our goal is to get and keep your financial systems up and running efficiently and accurately so you can make informed decisions and keep your business ready. If you're not working with Business Ready today, I'd encourage you to give us a call and talk some more and see how we can help. So today for budgeting, I wanted to first kind of put the program in perspective here a little bit with a simple cycle that I think that companies should be following when they're talking about budgeting. Budgets, forecasts, and plans. Most companies start out with a forecast, and that forecast may be something as simple as the business owner identifying an opportunity or threats to their business and what impact that may have on their business moving forward. So that forecast is kind of what's out there, what they think on a macro basis maybe that may be happening to their business. From there, a business plan gets put together on how they're going to respond to those opportunities or threats. And in that business plan, the follow-up from that business plan would be the development of a specific budget to do that. So giving definition to each one of those topics, your business plan, again, a statement of a set of business goals, the reasons they're believed to be attainable, and what the plan is for reaching them. Without a business plan, obviously it's hard to put together a budget. Again, your financial budget, it is that detailed financial plan. When I think of a financial budget, I think of control. It's what you're using to control your expenses and to measure your expenses against what the plan had called for. And the business forecast, again, it's making a projection or a prediction based on analysis of current and historical data, maybe with statistics or judgment. It doesn't necessarily line up to your chart of accounts in your system. It may or may not. It could be something at a much higher level. It could be macro-based, looking at an industry. So again, I tend to treat the two a little bit differently. To me, it would be unusual for someone to put an income or their P&L statement together to compare actuals against forecast. You can kind of compare actuals against your budget. But again, a lot of people use the word forecast and budgeting as one and the same. I think that there are some slight differences there. And so again, when we get back to this cycle, this process that we're talking about here, for some companies, it happens every quarter. It may happen semi-annually or annually, and for some companies it may be every 2 or 3 years. The budget gets set in year 1, and in year 2, the budget doesn't necessarily have to change if the plan hasn't really changed. Maybe the numbers shift slightly, but you're not having to rework a budget from the ground up every single year. Quickly, types of budgets. I think we've all heard these terms before. Generally, the operating budget is what you'd be comparing actuals to. Your sales budget and your marketing budget and your project budget may flow up into your operating budget, or they may be all built in as one, depending upon the size of your company. A quick comment regarding, maybe not regarding budget when it was written, but one thing I like to remember is when you are budgeting, looking back is obviously helpful. So when you're budgeting, where we start, again, I think last year's numbers or the past few years' numbers are a good place to look. But obviously your business plan is also important, or maybe even more important. When we start budgeting, most companies put their budget together lined up against their fiscal years. So if you're a 12/31 year end, you're probably just now starting to put your business plan together for 2014. I have seen companies put their plans together in January and February after the year's already started. Obviously, it doesn't help as much. If you can get it done now, I think that now is the right time to do it. For the remainder of the session, I'm going to actually jump in and just give you an Excel-based example of how using Excel and using Dynamics GP to manage your budgets can make sense. We're also going to touch on the cash flow calendar inside of GP as well. So with that, I'm going to go ahead and shift over into our demo environment. And what I've put up here is a spreadsheet. This represents a very simple budget that I'll be more than happy to share with you if you wanted to take a copy of it later on. But it's the basics of how I like to see budgets interact with GP. If you've ever exported a budget from GP, you'll know this is the spreadsheet that the system automatically generates. And I'll jump over to GP in a little bit here to show you how to create those, both bringing it in and exporting it. But the key to this initial tab that I'm working on, this is my 2017 initial budget, is that my GL account number is listed in column A. Column B is the description of the account, so account number and account description. Column C through column P represent the balances. So if this is a balance sheet account, I might have a beginning balance. Otherwise, P&L accounts are all zeros. And then spread across the top of the amounts per month. This is the format that you have to use to import your budgets into GP. Your account numbers have to start on row 4. Anything above that would get ignored. Your periods need to match up to the descriptions of the periods that you have in GP as well, otherwise they won't come in either. So what I've done is in this spreadsheet I've put together a few different thoughts or ideas on how you might be building your budget. And I've color-coded those in here so that we can see them more easily. In this example here, I'm simply doing a budget for one of my departments. This is my administrative department, Department 100. And there is no revenue in here, so this is just going to be the cost associated with this department. So one way to budget, if we take salaries and wages, obviously we could take last year's numbers and use this as a starting point. But if you want to get deeper into it, we can actually pull it from a supporting schedule. So I've created a tab called HR, and I'm going to jump over to that tab. And in here I simply list who my employees are. I've added a column for position. I've entered their salaries. And then again, just like the other tab, I spread across the months with a grand total. I just do a formula that spreads the salary across by 12. Up at the top, I enter any anticipated pay increase. So as that month comes, it looks at the estimated pay raises that I'll be giving and bumps up the salary by that percentage. I have the new staff that I'm planning to add in period 5, and so his salary starts at that point in time. So I've got my total salaries and wages across the bottom, and I also do a calculation of FTEs that I may be using in some other calculations as well. So again, an easy spreadsheet to maintain. You just keep your employees in here, and as you're planning to add new, you simply add them as a new row, and your budget gets updated for that. So that's how I would handle my salaries and wages. If you had overtime, bonuses, and other things, you would either pull them through there or estimate those some other way. The next set would be some other payroll-related accounts. So health insurance, payroll taxes, and training. For here, I use something called assumptions. So for health insurance, I'm taking my salaries, so HR E13, which would be the same as my total wages. I'm sorry, let me back up. This is on a per FTE basis. So HR E13 are my FTEs. I've got 3 employees, so 3 times what my health insurance assumption is. So I create a separate tab listing each of my assumptions. And right now I just have a few listed in here. So for health insurance, I've made an assumption that I should be budgeting $350 per FTE per month. I've named that cell health insurance, so I can refer to it that way as I move forward with my calculations. Likewise, I've got payroll tax expense, again, with a named reference, payroll tax expense, 7.65. I've done a training allowance of $50 per FTE per month, and I've done a supplies allowance of $25 per FTE per month. So now in my spreadsheet, I can list, go get my number of FTEs times my health insurance. For payroll taxes, in this case, take D4, take my total wages times my payroll tax expense assumption. And then for training, get my FTE times my training allowance. And so as you can see, as I move forward, in May I added a new employee, so my training goes up, my payroll taxes go up, and my health insurance goes up. As I get to period 6, when I introduced the pay increase, my training and my payroll taxes go up slightly, but my health insurance does not because it's based upon the number of FTEs. So again, using assumptions can simplify some of that as well. When I get to some of these other areas, company car, for example, here I set up a list of contracts. And this could be a pretty significant list. You could even list all of your vendors here if you wanted to. I've done it just saying, all right, I've got an auto lease, I've got an internet charge, I've got phone service, and I have rent. And again, you could list all of your vendors here or just a handful of, if you wanted to. List the GL account that they get charged to on a regular basis. So my auto lease is always charged to this expense account, and I'm budgeting it's $250 a month. My internet, I have a contract, it's a fixed fee, $200 a month. I've got phone service of $750 a month, and my rent is $1,000 a month. So we build those out in here, we map it to the correct GL account, and then in my spreadsheet, my company car, I just use a sum if statement, so it goes and looks at my contracts tab, and anywhere it finds a contract with this GL account mapped to it, it brings in the subtotal. So in this case, there's just one, so it brings in $250. My rent expense comes across as $1,000. Phone and internet grabs 2 accounts, so a total of $950, which are these 2 right here. So at any point in time, if I know that my internet, I've negotiated a new contract for the internet, and starting in April it's going to be $175 a month. If I just change that and spread it across, my budget's now been updated. Let's see. Yeah, my budget's now been updated, went from $950 down to $925 a month moving forward. So it becomes an easier way to manage changes to your budget going forward because we have the sources of those amounts in a little bit more detail in supporting schedules. There are also other accounts, and then maybe the lower dollar ones, where it's not worth building out supporting schedules, and in those you may just put actual numbers in here based upon what last year's were. So we don't need to create formulas for every account in here. Some of these can simply be my last year's actual numbers. So this spreadsheet, even though I've got formulas everywhere in here and I have supporting tabs to calculate it, this is still a good spreadsheet for importing back into GP. So I'm now going to move away from this spreadsheet and look at Dynamics GP and talk about budgeting here. So I've got GP open right here. I'm going to navigate to the financial area and bring my cards palette up and open up my budgets. So in here right now I have a spreadsheet that's labeled my 2017 initial budget, and I have a 2017 revision 1. Up top I can create a new budget, or I can go to Excel to import or export an existing budget. Right now I have one labeled revision 1 and the initial. If I wanted to create a brand new one for 2018, I would choose New. I'd use the Budget Wizard for Excel. Press Next. Maybe this will be on my 18 initial. 2018 initial budget, fiscal year. I'll choose 2018. I'll choose Next. Here I decide what I want to use as defaults for that budget. I could tell it to use last year's. I could make it blank. I could take any other prior year. I could take what's in there so far this year. I'm going to go ahead and do a blank budget for now. If I want supporting tabs to include other data or other years, I could do that. So I'm building a 2008 budget. Maybe I want to see what actually happened in 2017, but I don't want to put it in my budget at this point in time. I'll choose Next. I'm just focusing on my P&L accounts. I only want to do certain accounts, so I'm just going to choose I want for a specific division, and that would be my administrative division. So I'll insert that and choose Next. Okay, I get a list of all the supporting accounts that it found based upon that filter. I can manually add individual ones, or I can unmark ones I don't want. We'll choose Next. I'm going to send it to a new spreadsheet, and I'll finish. It does take a minute for the spreadsheet to create. In my test environment, I usually end up with a window down below, so give me 1 second for this to finish through. There it is. So now I'll save it with a name onto my desktop. So this will be called 2018 initial. And now it's sending data to it. Okay, so that should look familiar. This is my 2018 budget now in Excel. I can take my 2017 and bring my formulas over and build that out again for next year. But I could also take my spreadsheet that I built for 17. Actually, let me back up. This 18 spreadsheet I just created, notice I have my empty budget. I have a new tab here that's labeled 2017. These are my actual numbers for 2017. So they're in there for reference purposes only. I could cut and paste those over to my budget if I wanted to use any one of those lines for my budget. Now, I'm going to close that out for now. That's how you create your spreadsheet. I could also take this, and if I have a good spreadsheet that I like working with, rather than starting from scratch each year, I can just rename this spreadsheet and make this my 2018 budget. Again, edit my numbers, edit my periods. I'm not going to go ahead and do that exercise right now, but no, we can. Let's see. Let's do a replace here. Replace 2017 with 2018. Okay, let's fix these as well. Okay, so this may be the basis for my 2018 budget now. Now my assumptions are still intact. I can build and edit these if I need to. I can edit my HR tab or my contracts tab. I can rename this tab to 18 as well if I need to. And so now after your editing is complete and you're satisfied with this as your budget, we'll save it. I'm going to save this one as my (2018) initial budget. Exit that. Now coming back to GP, even though I have a budget out there called initial, I want to go ahead and import back in on top of that budget. So I go back through the wizard. I choose next. I'm going to import into an existing budget. It's coming into my 2018 initial budget. Choose next. It asks for the Excel spreadsheet that you want to use. It's on my desktop. 2018 initial. Actually, I didn't name those right, did I? Let's see. It's actually this one. Okay, pick the tab that contains the data. It would be this one here. Next, and finished. Okay, and that spreadsheet was just imported back in, so now my budget is back in the system as 2018. You've now got all your budgets in there. You can edit your management reporter reports to use one or more than one of those budgets in there. I tend to bring them in as revisions as opposed to overriding every single time. That way, if I do want to go back and look at an earlier one, I can see it there. As you start to grow, the spreadsheet approach, I think it's effective for getting started and getting your arms around the process. Again, larger companies may find that the spreadsheet gets a little bit unwieldy and difficult to manage. At that point, there are definitely some solutions out there. Adaptive planning would be one of them, where you could put some more order or audit trail or security around the building of that budget so that your rules and things and formulas stay intact from year to year. But the process of bringing it in and out of GP would be the same. Okay. The other thing I want to talk about today, that was the basics around operating budgets. And again, if someone wants a copy of that spreadsheet to use as a starting point, I'd be happy to send it over to them. But the other tool that's often not used by companies, I think for smaller businesses it can really help, is within GP the cash flow forecast. With this cash flow forecast, what you're able to do is basically on a calendar see where your cash is going to be over the next week, 2 weeks, 30 days, 60 days, depending on what your business is like. And I'm going to go ahead and go in through inquiry and bring up the calendar itself first so you understand what's happening here. So this is my cash flow calendar. On a day-to-day basis, it predicts what my cash balance is going to be. The bottom number is my cash balance. Anytime you see a second number on a particular day, that means that there's some activity that the system is expecting that will affect cash. And on the calendar, you can drill into those numbers to see what those are. So I'll start down with the last day of the month, the 15,000. If I click on that, okay, it brings me up to the Explorer window where I can go and look under Financial, and I can see that I'm predicting. Actually, under Transactions, I'm predicting or budgeting that I'm going to have a payroll transaction that's going to affect cash by 15,000. These CFM transactions are either imported or entered into the system manually. So for anything that does not happen through receivables or payables, you would need to import those in to have them there. So you could put 12 months of payroll and import that in. Any major purchases or any other cash-related transactions you would need to manually import and manage, but they would show up in here. If I look at a different day, there's a $42 transaction on this day. If I click on that and open up receivables, okay, it's assuming that this invoice right here based upon the due date, we should be receiving monies of $42 from this customer. We invoice them and it's due on 4/12. As I advance to future months, I see minus 125 listed down here. If I click on that and go to payables, same idea. I have some invoices from these two vendors, one for 50 and one for 75. The invoices came in April. They're due net 30, so they're due to be paid on 5/21. So the system is going to assume that I'm going to be spending that money on 5/21. Okay, so that's how the calendar works, and you can advance forward. Obviously, the further out you go, the less accurate it would be, because you may not have all of your invoices in there going out past 30 days. But usually for a 30 or 60-day window, for most businesses, this cash flow calendar could be fairly accurate. So to set up that cash flow calendar, under Setup, under Financial, we build our forecast. And all we need to do to build out a forecast here, we give it a name and a description. We decide what checkbooks we want to use for this. So you may only be wanting to use your checking account and not show your savings or any other accounts in there. We decide for accounts receivable whether we want to include what's open and what's in work. So work would be things that are unposted. Same thing with accounts payable, work or open. And then these are my cash flow transactions. So if I open this up, I get a list. There are my 3 payroll entries that were imported in. So payroll at the end of each month would be 15 that I need to budget for from a cash flow standpoint. The next row down, the system will also look at sales order documents. It could even look at quotes in your system if you wanted to. So if you had a quote, it would look at the payment terms of that customer. The only downside is it would be difficult to accurately predict when a quote would be invoiced and then eventually paid. So you may or may not want to use quotes. Purchase orders would work the same way. If we use purchase order documents, it would assume that based upon the estimated receipt date, that the invoice would come in on that day as well and be due based upon the payment terms assigned to that invoice. You can also forecast when you're talking about accounts receivable, and this is an important one, based upon the due date of the invoice. So if the customer gets net 30 terms, or it can look at that customer and say, you know what, this customer pays net, they're due 30, but they always pay me within 10 days. Or they always pay me 60 days. They're always 30 days late. So using average days can actually be more accurate if your customers, if you've got a large number of customers and their average days to pay vary significantly from customer to customer. You may find that to be more accurate as well. And up top, you can, if you want to, enter in a GL account and an initial account balance if you wanted to include additional cash in there. Again, so that's the cash flow forecast. Okay. So for today, that was all I was planning to cover for budgeting and for cash flow forecasting. I appreciate you all joining us for this morning's session. If I can answer any additional questions offline, I'd be happy to do that. I look forward to talking with all of you soon. Thanks.